Hi, everybody. Welcome to the Den, where we are a source of inspiration by using our experiences, knowledge, and voices to empower women to move with intent. So today, we're going to talk tax talk, something real basic, but we're going to talk about taxes. My name is Michelle La Entrenadora.
Hi, I'm Dr. Uchin of the DR.
Hi, I'm Sherelle, the socially conscious social worker.
And I'm Dr. Evie Taylor, AKA the People's Professor. And together we are the Muse.
So it's tax season. We got a few more weeks before the 2021 taxes are due. And a lot of people dread this time of year. Some people are excited because they're like, oh, I'm gonna get a tax refund. And then other people are like, oh Lord, it's just it's a big deal to get it all together and remember everything because you want to make sure you get the most of your money, right? So last year was full of tax changes, and then knowing the key changes could help you maximize your tax return. A lot of people get their taxes done somewhere, but some people try to do them themselves. So I'm just going to go over a few of the most important changes to keep in mind. But before we do that, I'm going to do a little quiz and see how much people know. I mean, this is really basic stuff, so I'm gonna start off really easy.
I'm gonna fail.
Okay, so, and it's a multiple choice. So what is adjusted gross income? Sometimes people say AGI. Is it your after-tax income, your taxable income before taxes, or your taxable income after taxes? Or does anybody know what that is?
Can you
say that again?
Okay, do you ever hear like somebody, like they'll say, what was your adjusted gross income last year? So is it your after-tax income? Is it your taxable income before taxes? Is it your taxable income after taxes?
Two.
Yes, correct. So your AGI basically is like gross income, like before taxes are taken out, deductions, credits, all that. So it's like basically your salary, right? Your income.
Wait. So
Why is that adjusted?
Because there's certain things that are not taxable, right? Certain things that are not taxable. And once they remove that, that becomes the gross tax.
Yeah.
Wait. Say that again. Okay, so it's adjusted because they remove what now?
No, let's say for instance, you had losses in business. That, let's say you have a job and then you have a side hustle business, but your side business didn't make money. You lost money. So your salary, let's say, was $50,000. So that's going to be up there, 50,000. But then you lost maybe like 4,000 in a business.
Okay.
Your adjusted gross income is going to go down to 46.
Oh, okay.
So there's certain things that balance it out.
I got it.
So good job, Sherelle. So what is the difference between a tax deduction and a tax credit? Number one, a deduction reduces your taxable income and a credit increases it. Number two, a credit reduces the tax you owe and a deduction reduces your taxable income. Three, they are interchangeable. And four, both are taxable at 20%.
B.
Two.
B. Correct.
I would have actually got that one right. That's one right for me.
Well, I'm giving y'all the easy one. I'm giving y'all the easy ones first. Y'all want to act like you big and bad.
I'm not acting big and bad. I'm just happy I got one right.
Okay.
I get them all wrong.
Yeah. So a credit increases your income and then the deductions lower, right? So let's see. This is pretty easy. Which one doesn't count as an itemized deduction on your income taxes?
Oh, Lord.
It doesn't count as an itemized deduction. Number one, cost of utilities like water and gas. Number two, gambling losses. Number three, theft losses.
I'm going to say gambling because that shouldn't be fair.
And any other guesses?
I say one.
What's the first one?
Cost of utilities like water and gas.
Well, I guess that depends on if it's a business or whether you're just using it for your home.
Okay, so the answer is 1. It's not an itemized deduction.
Oh,
So,
I'm doing
yeah,
shit.
your personal utilities, no, it's not deducted, but you're right, Evie, if it's part
Okay.
of a business use, like you have an office in your home, then you can deduct a portion of your utilities and,
Okay.
and like water and gas. So Uchenna, the gambling losses, that's not a deduction. So what can happen there is you can only.
Right, I thought the question was which ones are not a deduction?
Right, but this is the thing.
Not an itemized deduction.
Not
You
an
can use it for
itemized
something
deduction.
else.
It just might reduce your income.
Right.
It's not a
Wait,
deduction.
gambling, if you go gambling, you lose money, you can take that, you can, right.
Unless you also won. Let's say you won $2,000 and then you lost $500 some other time, then you could take the 500 from the 2,000 as from income and you just say that you got $1,500.
Right. Right. So it's not an
But if you-
itemized,
Yeah, but it's-
standardized deduction.
Yeah, but it's not a deduction either way you look at it. It's just part of your income.
Okay,
Right.
okay. Wow,
So,
I didn't even know that
okay.
even factored,
So-
okay.
Next question. So if you sell your car for more than you paid for it, the profit is A, no taxation, B, subject to a seller's tax, or C, subject to capital gains tax.
C.
I'd say subject to capital gains.
Exactly. Good job.
Well, you have a little business major going on we don't know about?
Sherelle, all right, you got it. All right, and then I have a couple more questions. The next one is the largest source of government revenue is which? A, individual income taxes, B, payroll taxes, C, corporate income taxes, or D, estate and gift taxes.
Oh.
Yeah,
What
that's
is the
one.
biggest?
Yeah, what does the government make the most money off of? Individual income taxes, payroll taxes, corporate income taxes, or estate and gift taxes?
I'm going to say B.
I'm gonna say A.
Payroll, individual, what do you say, Abby?
A.
A, yep, A.
Oh, I was gonna
A.
change it to Sherelle because she was getting them all right, but
Individual.
No, the reason I thought payroll,
that's-
because I think that they take the most
Yeah.
out that like that. Like, I just think that they take so
Well,
damn much.
I feel like that's, I mean, when you look at politics, that's the main argument, because the middle class is taxed such that their income, and if you think about the millions that we have built in our country, and everyone
usually
is
from
taxed.
that.
Everyone, right?
So the individual income taxes are levied on the wages and salaries that the individuals make, as well as from their investments. And that's 50% of the government's revenue is from
Got
that.
it.
Wow.
Only 7% is corporate income taxes.
So now
I
you-
knew it
now-
wasn't corporate. I was
That-
really
that
clear it
takes
wasn't
you-
corporate.
So now you see the big divide between Democrats and Republicans, really, right? Because Republicans, and I'm nothing for either side, but Republicans are about individual taxes because of their income and their businesses. And Democrats are more, let's take from corporations because they're
Let
not.
them pay their share of the wealth. Absolutely.
And they have so many tax breaks, so many incentives. So anyway, that goes.
Which
into
brings
how-
me to my last question. Tax expenditures, known as tax breaks, tend to benefit A, the working poor, B, the middle class,
Nope.
C, the top income earners.
The top income earners.
We all
Yep.
know that answer.
The top 20% of income earners receive most of the benefit from several major tax exemptions. Lower rate on capital gains and dividends, charitable contributions, mortgage interest and property taxes, and state and local taxes. Is that crazy? Is that crazy?
That's not crazy. That's America.
And it's even crazier when you think about, not mentioning any names, people going to jail because they're trying to hide the money and they have billions of dollars and they don't want to pay taxes.
Yeah.
They don't want to pay a dime in taxes.
Yep.
And some of them don't. Like they
No, they
said, you know, they
don't.
put that list out, you know, about the top earners not paying any money.
And they and the
Middle class,
loopholes, there's so many loopholes that they don't even suffer any consequences. Anyway.
So
there's so many loopholes, but
crazy?
you got to be in a certain amount of money to have. So
Right.
that is the setup.
Right.
So I don't have 5 million to stash somewhere. So I don't qualify for some of those tax shelters.
Right.
Yeah, so I don't know, because obviously I don't ever do my own taxes. But the crazy thing is, when we made the most money, I got the most back. It seems like it should be reversed. Like when you're making the most money, like you should pay.
Mm-hmm.
And I did not have to pay. Now, when I wasn't making a lot of money, I had to pay.
Right.
And then when
I guess I'm not making a lot of money because I always got to pay. I don't get a tax. I don't get like, oh, my tax refund. I'm like, because I feel like I need my money during the year. I don't need you holding on to it because I got stuff to do.
Mm-hmm.
Bills to pay.
Yep.
So I don't let them, I don't get like a lump sum in like, oh, no.
Right.
Never
Well, we can go on and on about that, and like all those tax loopholes, and that's just another conversation for another day. But back to reality, to like the middle class and the lower middle class and all that. So I just want to go over a couple of changes that.
Yeah, let me write this down.
So, well, and if you took your taxes somewhere to be prepared, Sherelle, they're on it, and it's almost automatic. These days, even if you do your own taxes and use a system like H&R Block or like what's the other one?
I use TaxAct.
TurboTax,
and all of those. It's automatically in there. They make it really easy, so you don't have to remember these things. But I
just like to know it, like when I write it down, because I'm gonna ask my tax rate. Did you do?
Yeah. So this year, the standard deduction increased for single and for filing jointly. So it increased by $150 for single filers and $300 for couples filing jointly. Also, charitable donation deduction increased, whereas before you can deduct $300 per tax return. Now it's $300 per person. So it could be up to $600 deduction for like filing jointly. And you can search any of the eligible organizations for charitable contributions on the IRS website, irs.gov. And you search there for everything. I mean, it's not like an easy read or anything, but you get all the information you want on there. The child tax credit was expanded. So where before people claimed $2,000 per child, now it's $3,600 per child under 6, Uchenna. But it went up to $3,000 for children above 6. So
why you shaking your head, Sherelle?
Because I don't have that.
Oh.
No, under 6. Yeah, under 6. Or yeah. So, but this helps a lot of people. You know what I'm saying? This helps a lot of other people. The unemployment benefits tax break that they had for like the year 2020, that's not there anymore. So that's a negative. So there was a tax break that legislation allowed up to $10,200 for single filers, but that's gone. Any income that you made from unemployment benefits is taxed again. They just did that 1 year and it's gone now. So also the lifetime learning credit, which is good for qualified tuition and other expenses paid for undergraduate, graduate, and professional degree courses. So this is something for you, Sherelle, you're doing right now. So, and also for courses that people do to acquire skills. So a lot of people can use this one. The previous credit was $2,000 per student per year, and it has been raised to $2,500. So that's an extra $500 added on to basically your money that you get back. A last thing I want to mention, the tax deductible medical expenses increased. So that's good for some people that have to get expenses deducted, medical expenses. So instead of capping expenses that exceed 10% of your adjusted gross income, they change it to 7.5%. And I know this might be confusing for a lot of people, but if someone's doing your taxes, you can mention it and make sure that they're taking care of that. Or if you're doing it yourself, just look these things up. And like I said, when you're using the programs, a lot of times they say, what's your adjusted gross income? And then they say, how much did you spend? So it calculates it all anyway. So you don't necessarily have to calculate these things yourself, just as long as you have the receipts and you know your totals. And as long as you know your totals and keep your receipts and add those up correctly, then you should be good. So other changes this year were that the income tax brackets were raised due to inflation. That's another story for another day too.
Wait. So that means that, like, if you were in a certain tax bracket, and let's say that you would get taxed 20% of your income, that same bracket that you're in is now like you're going to get 21%.
No, it's better.
It's the other way. Got it.
Yeah, the other way. It's making it so you can make more money and still stay in that bracket.
I hope so. Lord, I would be so happy. Even if they gave me $100, I'll be happy skipping to go get, I'll be happy. I don't have to pay something.
But see, that's what I'm saying. That's crazy. Like, as a single mom, see, I don't like that. When we look at the system, you're a single mom, you have a daughter in undergrad and you're having to pay money.
Yes.
That just doesn't make sense to me.
Right.
Uchenna, you're on mute.
Uchenna, you're on mute.
On mute.
But if she makes more money, it's actually better for her, because now if she makes more money, she's going to stay in the same tax bracket.
No, I'm talking about overall, like,
overall, because it's just ridiculous. It's really ridiculous that it infuriates me, to be very, very honest. It does.
Yeah, because like, my sister's a single mom and she has 4 kids. Even when she had 4 kids, that were young, you know what I mean? All 4 kids still in the house. I still got more back in returns than her. And
Really?
that's crazy.
Really?
Yeah.
My mother was a single mom and she used to get thousands back when all of us were in the house.
It depends on your income. And see, like, even with the like when they did that stimulus thing, I was so pissed because they went across the board. If you made a certain amount of money, you didn't get any stimulus. And I'm like, that's not fair, because our expenses are higher. Who couldn't use another $1,000? Like, I could. Right? I was really upset because I thought that was so unjust, because just because your salary was a certain amount doesn't mean that you couldn't have used that extra stimulus.
It also depends on how much you're claiming throughout the year. Like, because if you're getting back most of your money, then you possibly can owe later. But if you're like contributing towards the federal taxes, then that's when you get back a lot.
And then they penalize you because they're like, you should have been paying more. Then they pop you at the end, like they pop your end.
With the penalty. Yeah, it's crazy. One thing that I want to just let everybody know, because I also received one of these letters, a letter 6419.
Which one was that?
It's the child tax credit one. So
I got that one.
They gave advance credits, right? So you got to make sure, or your tax advisor will make sure to deduct that from the total that they're allowing you. Now, if you never had any advanced tax credits, then you should be able to get the full amount.
Which was ridiculous, because I never claimed anything. And one day I saw like $100 come into my account. I was like, what the hell is that? I didn't ask you for anything, because see, the IRS is ghetto, because I'm hashtag get rid of the IRS. All day, because they're ghetto. They will come, they're gangster. They will come and give you money. They go, give it back to me. If not, here's a left. Like, they'll put a penalty on it. And it's like, I didn't ask you for anything. I don't even qualify for this foolery. I don't want this. And I was really upset.
Right. Yeah. So more than 22 million Americans have already received their tax refunds this year. But according to the IRS, if you want your tax refund to arrive quickly, file as early as possible, file electronically, that's quicker, and set up the direct deposit. You'll get your stuff back quicker. Some of the reasons why it might take longer to get your tax refund is that there are errors, of course, like something that I mentioned. What I mentioned about the that letter 6419, make sure you have the accurate amounts with that, because then it'll be a problem. They'll be investigating, that could make your refund take longer to receive. Make sure your banking information's correct. Make sure you filed the proper return as far as like, single, joint, head of household, all that. And if you file a paper return, it takes longer also. So that's just you said, oh, well.
Oh, I hate them like having access to my accounts. Because I remember I called the IRS for something and they were like, oh, can we have your account? I said, hell no. I was like, y'all the IRS, if you want it, you'll find it, but I'm not giving you anything because I don't want you dabbling in my account. Like, I don't like that.
They already do. They already do.
I know, but don't ask me because I sure ain't giving it to you. You go and find it the way you do it.
Yeah, that happened to my sister. Like one day she had a negative balance because something happened with her return that she owed more money and they just took it. And like she went to go pay for something, it was gone. Like that's it, it's gone. Like
they are the biggest gangsters. I say get rid of them and raise like sales tax. So if you buying stuff, you automatically gonna get taxed on it. I say get rid of the IRS because it's not even in lay terms that people can understand. It's just ridiculous. And I think that we are heavily like laid it down with all this hoopla. If you can pay for something that's $10,000, you should get taxed on it for $10,000. That's how I feel.
There is an idea of bringing that. Some countries do that, and that's the type of tax.
And I think we should.
And there isn't that is out there, but there's going to be some people that fight that for whatever reason.
They're going to fight it because they get to go into them loopholes. See, there is no loophole. If you paying for something for $10,000, you get taxed on it. It is what it is. Right. So if you got the money to pay for that, then you should get taxed on that.
So people that spend less, you're tax less.
The problem is the people that are making the laws and policies are the people that have money. Therefore, all the policies and laws are going to favor them. And that's why you're making a lot of money. You're not paying taxes. And people that are poor
because you're contributing to lobbyists, and the lobbyists that you're contributing to are making sure that the candidates that will support your beliefs and what you want and what you need are the ones that are in office.
Correct.
And that's why now they're saying they need more of us running for office, more of us that can speak and represent regular old folks that don't make $500 million a year.
Exactly. Because it's ridiculous.
Look, I just wanted to go over a few things, right? Definitely, it's not an easy task to do your taxes. So professional help is always best. If you can't get the professional help, try to do a little bit of research on the IRS website. Make sure you get it from there for information. But one den directive today, and it is get your taxes in by April 15th. That's all I'm saying. 18th
this year, I think they
claim everything you can claim.
And don't think that they're going to extend it like they've done the past 2 years and wait to the last minute.
Right. So definitely.
I'm upset because I've been waiting like the last couple of years. I haven't even done mine until like the summer.
No, it's due the 18th this year because the 15th is Good Friday. So they're letting it be on the 18th.
Oh, thanks for mentioning that, Cheryl. I didn't even know that. Thank you.
So, Michelle, before we go, I have a question for you because maybe this might be helpful to people. What are, any of you can answer, what are some write-offs that you think that like a lot of people, that's the problem. Like, even if you pay someone to do your taxes, you still have to let them know, like they don't ask you, what are your write-offs? It's like, you still have to go with that knowledge. So you still may not be even getting all the money back that you have, or, you know what I mean? That you deserve. So like something like I didn't know before. I mean, I learned this years ago, but I didn't know, like if you have like a uniform or something that you have to wear for work, you can write that off. Are there like little things like that you think might apply to a lot of the viewers? I mean, I know there's a million things you can write off.
Yeah, there's so much. It's like, that's not an easy answer. And it depends on the person. It depends on their lifestyle.
And their profession.
I really wouldn't want, I really can't really answer that. Something that would be good is for somebody to do some research and say, what are some, like, look it up, because there's so much. Like, I would have to look it up right now to give you an answer, to give you a good answer. You know what I'm saying? Because, and things change every year.
Yeah,
so it's like, you can't even go by what you went by. Like you said, the uniform, I don't know if it's still intact like that, but it might not be anymore. You know what I'm saying? They'll change it every year. So like, you have to make sure that you're up to date with the current tax laws.
Well, you know what, you're right. Somebody just told me, like, within the last year, that if you know, like I have a lot of events, like work related events for my husband at the house. And they said that if you have a house cleaner, you can deduct that because it's a work event that's coming to your house. I don't know if
Okay.
that's true. I mean, I never did the research, but that's what they said. I never heard that before.
It sounds like that's a possibility. You know what I'm saying?
Because it's
It sounds
work
like-
related and these expenses, all of
Yeah.
that sounds really great, but you got to also, like you said, Evie, you got to kind of figure out like, what is my lifestyle like and what should be deducted. And sometimes we don't always know, and they hedge on that. That's why I can't.
Yeah.
Hashtag,
That's why if we're
we should
paying
start
somebody-
a hashtag get rid of
Yeah.
IRS. I'm going
So,
to
I-
do
But
that.
we're not gonna be responsible if we're paying somebody, you know, you know what I mean? So I can still try to send that off. I mean, they'll tell me whether or not, you know, but I'm saying, so just to get people thinking that there's a lot of things like outside the box, you know, you might
Yes.
really think that, you know,
Yes.
my kids are a write-off or schools are write-off or things like that, but there's so many different things that you
Yes.
would never even think of. Cause I would never
Right.
even think of like, oh, let me have somebody clean my house so I can write it off, you know?
Right.
So for years, I do when I lived in LA, I had someone do my taxes because there was state taxes and everything. But for years, I used one of the Tax Act, Tax Turbo. I'll use one of those, and they ask every question. And I'm like, oh, did I do that? Oh my God, let me go see if I have that receipt. Oh my God, because those things are, so I say, I like doing, if I'm not using someone, I like using the
programs.
the programs, because it like jogs my memory. It really does. And I have to go find what I've done, but it does. Like I didn't even, like for instance, Evie, when Eddie started working his new job, he had to have a truck. So I didn't even realize that that's a write-off. I mean, I'm saying the terminology wrong, but did I want to take it over how many ever years or take it in the first year?
The depreciation.
Yeah, but the truck that we bought for him specifically for work, I didn't know until they were asking me questions. Did you buy a vehicle for work? Did you do this for work? Did you do that? Did you do that? And anyway, I mean, I think even if someone uses an individual tax preparer, it may be a good exercise to go through, because some of them are free online. Just go through to see. I have a little sister that's anal, so she does QuickBooks every month. She reconciles everything, puts everything in QuickBooks. So when it's tax season, all she does is give her QuickBooks to her preparer, and it's everything
That makes sense. I'm gonna start doing that because I'm very organized that way, and I like the fact that makes sense because I like to have things kind of.
That's a lot of work.
Yeah.
It's a lot of
It
work
is.
at the end of the month.
But
it's helpful though. It's helpful.
So knowledge is definitely power when it comes to taxes. So make sure that you get as much information as you can, and make sure that you're as thorough as you can, and then everything should be good. So glad you were with us today, and make sure you join us
in the den,
where places don't make you feel at home.
People do.
Bye.